Hey there! Are you in your 40s or 50s, or maybe just a few years away from retirement, and thinking about dipping your toes into the stock market? Well, if you're feeling nervous because the market seems all over the place right now, you're not alone. But here's the truth. Turbulence doesn't mean stop, it means start smart. Today, I'm going to share 5 powerful reasons why you should start investing now, even when things seem a little shaky out there. Stick around. This could literally change your financial future. You know, I talk to folks every day who think they've missed the boat on investing. They see these young guns on the internet bragging about their crypto gains and think, well shoot, I'm too old for that. Should have started younger. Let me tell you something. That's baloney. Now, you might be thinking, Ron, I'm 45. Is it too late to start investing? Are you kidding me? Absolutely not. In fact, you may still have 15, 20, even 30 years ahead of you, especially with people living longer and healthier lives these days. That's a lot of time for your money to grow, even if you're just parking it in some nice conservative investments. And speaking of growth, let's talk about the magic of compound interest. This is where things get really exciting. Compound interest is like a snowball rolling downhill. It just keeps getting bigger and bigger. Every time your investments earn money, those earnings get reinvested and start earning even more money. It's like a beautiful money-making machine. For example, let's say you're able to invest $500 a month. That's like cutting back on those daily lattes and avocado toasts, folks. Now, with a modest 7% return, which is very doable in the stock market over the long haul, that $500 a month could grow into over $200,000 in 20 years. You heard me right, $200,000. And that's just with consistent, steady investing. So even if retirement feels like it's right around the corner, you still have time to build a nice nest egg and protect your future. Let's talk about the elephant in the room. Inflation. It's a real buzzkill, isn't it? Prices going up, and your hard-earned money just doesn't stretch as far as it used to. Here's the deal. When you keep your money stashed away in a savings account, even a high-yield one, it's probably not keeping up with inflation. That means your money is actually losing value every single year. It's like you're slowly flushing your money down the drain. But here's the good news. Historically, the stock market has outpaced inflation by a wide margin. That means when you invest your money in the market, you're giving it a fighting chance to not just keep up with inflation, but to actually grow and increase your buying power over time. Now, I know what you're thinking, but Dave, what about these turbulent times? The market's all over the place. And you're right, the market can be a bit of a roller coaster ride. But you know what? Sometimes those drops and dips are actually a good thing. Think of it like this. When prices drop in the stock market, it's like everything's on sale. You get to buy pieces of great companies at a discount. And guess what happens when the market recovers? You guessed it, your investments go up in value. Chapter 3. Let's talk about those turbulent markets for a minute. They make headlines, they make folks nervous, but they also create some of the best opportunities for savvy investors. Think back to 2008. Remember the financial crisis? The market took a nosedive and a lot of people panicked. But you know what? The folks who kept their cool, stayed the course, and even invested more during that time, they came out on top. Why? Because they were buying stocks at bargain basement prices. They were getting in on the ground floor of companies that were poised for a comeback. And when the market recovered, as it always does, those folks saw some serious gains. Look, I get it. It's scary to invest when the market's going haywire. But here's the thing. You don't have to be a market timer to succeed. In fact, trying to time the market is a fool's game. It's impossible to predict exactly when it's going to go up or down. The real key to success is time in the market, not timing the market. The longer you stay invested, the more time you have to ride out those ups and downs and come out ahead in the long run. Chapter 4. Now I know what some of you are thinking. Dave, this all sounds great, but I'm not a financial expert. I wouldn't even know where to begin. And you know what? That's perfectly okay. You don't have to be a Wall Street whiz kid to invest your money wisely. These days, there are so many tools and resources available to help regular folks like you and me invest with confidence. Take ETFs and index funds, for example. These are like baskets of stocks that track a particular market index, like the S&P 500. When you invest in an ETF or index fund, you're instantly diversifying your portfolio across hundreds of different companies. It's like having a team of experts picking stocks for you, but without the hefty fees. And if you want to keep things super simple, there are even robo-advisors. These are automated platforms that build and manage your investment portfolio for you based on your risk tolerance and financial goals. It's like having a personal financial advisor in your pocket. The bottom line is this: you don't need a finance degree to start investing. With a little bit of research and the right tools, you can start building a brighter financial future for yourself today. Chapter 5. Let's be honest, folks, this isn't just about numbers and charts and market trends. This is about something much bigger: peace of mind. It's about knowing that you're taking control of your financial future and setting yourself up for a comfortable and secure retirement. Whether retirement is 5 years away or 15 years away, having investments gives you options. It gives you a safety net. It means you won't be solely reliant on Social Security or a pension, which, let's face it, might not be enough to maintain your lifestyle. Even a small portfolio can generate passive income, which is like having money work for you while you're sipping lemonade on the porch swing. It can help you cover those unexpected expenses that pop up in retirement, like a new roof or a medical bill. But more than that, investing gives you confidence. It gives you the freedom to pursue your passions, spend time with loved ones, and enjoy your golden years without constantly worrying about money. And that, my friends, is priceless. So let's recap. Time is still on your side. Investing beats inflation. Turbulent markets create opportunity. You don't have to be an expert. You'll build peace of mind for retirement. Look, the best time to plant a tree was 20 years ago. The second best time? Today. Starting now, even during a rough market, sets you up for a more secure future. If this helped you feel a little more confident, go ahead and hit that like button and subscribe. I post videos just like this every week to help you grow your wealth wisely. Let me know in the comments, what's your biggest fear about investing right now? I'll reply and maybe even feature your question in a future video. And hey, remember, you're not too late. You're right on time. Thanks for watching, and I'll see you in the next one.